In this video, you will learn 4 basic rules of investing where you can invest $100 and earn $1,000, as well as 4 win-win investment options for passive income. And that's not all, we will also help you decide on the purpose and strategy of investing. So let's get started. Chapter 1. 4 main rules of investing. 1. Never invest with credit, except in the only way that will be described below. 2. Operate with free money. Finances necessary to pay for education, medical treatment, and other mandatory expenses should not be touched. 3. Assess not only the returns, but also the risks. 4. Share the risks. Scientifically, it is called diversification. And simply, do not keep all eggs in one basket. Even the most reliable instruments have a minuscule chance of failure. It will be a shame to lose everything if you are radically unlucky. Now let's move on to examples, methods, and calculations of investing. Chapter 2. Investment Options 1. Real estate is not increasing in value. In the United States, the following is happening right now. The Fed's discount rate has risen, and mortgage interest rates have risen accordingly, because of which housing has become less affordable and prices have started to decrease. In my opinion, real estate will decline in price for at least another year, if not several years. Most likely, this trend will also affect the countries of Europe and the CES. Therefore, investing in real estate now is one of the worst options. It makes no sense to buy square meters, which continue to lose in price. But there are people who are confident in the reliability of such a method. I have an acquaintance who bought an apartment in New York just before the crisis began in 2007. And that apartment still hasn't gone up in value to the amount he bought it for. Real estate goes up in value all the time is a common misconception. So far, the near-term outlook doesn't look very attractive. 2. The stock market is unpredictable. It really is possible to make a good profit from it, but only if you know it very well. Without a sufficient knowledge base, it is easier to lose on the stock market than to earn. Those companies which used to be valued in large sums are sharply losing value. This is because valuations are now more conservative and objective. If you think the stock market can't go any lower, you're wrong. It's a pretty risky investment option. 3. Cryptocurrency, the main object of regulators' attention. A relatively new investment model, which is becoming more and more popular every year. The future of crypto is uncertain, and it is impossible to predict it. One thing can be said: the more this direction is involved in financial life, the more attention regulators pay to itself. Most recently, the SEC, Securities and Exchange Commission, made serious demands to the crypto exchange Binance. What changes we should expect and what they will lead to is still unclear. 4. Invest where value is rising. You may have heard the story of Silicon Valley Bank. The bank went bankrupt this year, and the news caused quite a stir. And while none of the depositors suffered because of the relevant law that protects deposits, the shareholders lost everything. After the Fed's financial rate rose, the bank's customers began to move their funds en masse to other organizations, to where the deposit rate is higher. For example, Robinhood has recently been offering an unheard of 4% APR in the US. Note that 6 months ago, cash was not as valuable as it is today. So if you have a certain amount, I suggest putting it in an insured deposit in a US bank. Yes, it is a small interest, but your funds will be under reliable protection. And even if the bank closes down, the government will immediately compensate you for the money. 5. Venture capital funds and startups have great prospects. Investing in startup funds and companies is risky. That's why you should invest only a part of your capital in such things. But the fact is that in recent months, the valuations of such startups have fallen dramatically. A stake in such an organization can be bought more cheaply than ever. On the other hand, this drop is temporary, and the situation will change significantly in a few years, and you will be able to get a very good return on your venture investment. Chapter 3. General understanding of investing goals and strategies. It is important to realize that investing is not only a way to multiply your savings, but also a wide world with many opportunities and risks. 1. Investing goals are fundamental. Determine what you want to achieve, whether it's financial independence, retirement, or other goals. Goals will help you choose appropriate investment tools and strategies. 1. Your investment strategy depends on your goals and risk tolerance. You can choose long-term investing, short-term investments, or a diversified portfolio depending on your situation. 3. Diversification is the key to reducing risk. Don't put all your eggs in one basket. Spread your investments across different assets to reduce your exposure to market fluctuations. 2. Systematic investing is a great way to invest regularly, even if you don't have large sums of money. Small, regular investments can result in significant savings over time. So, remember that investing is a long-term process. The first steps can be challenging, but with preparation, patience, and the right knowledge, you can achieve financial success. Feel free to ask questions and learn more. We hope this video has helped you better understand how to start investing your first money. Thanks for watching, and we wish you a successful investment.